This is China and Russia's plan to crush the dollar. The US dollar has been the most powerful world currency for almost 80 years. As we have seen, the currency value offers the US nearly unmatched control over the global market. It can ruin any economic growth in just weeks. Due to its strength, it's also conquered strong competitors like Russia and China. What about that? Here is where Russia and China have created a perfect strategy to end the dollar dominance worldwide, and it's working out very well when considering the data collected over the past 10 years. If China and Russia's plan is prosperous, a new world currency can develop in the next 10 years, with the USD's share in the worldwide money market falling from 71% in 1999 to less than 59%. So what is China's and Russia's global strategy to destroy the dollar's dominance worldwide? How do they plan to eliminate the US from its position as the dominant power? Reasons why the US dollar is more powerful. The first reason is that the US dollar is the currency of trust. Nearly 80% of the world trade is conducted in the US dollar. The second reason is that the US dollar is the only currency that allows you to buy oil from Saudi Arabia. A final reason is the SWIFT banking system was created after World War II and now dominates all worldwide transactions. It is used by over 200 countries and 11,000 institutions around the globe. The US dollar is the only currency that allows you to buy oil from Saudi Arabia. A shift from US dollar funding would give Saudi Arabia more flexibility in its overall financing structure, albeit after an initial disruption related to its de facto currency pegged to the US currency. The vast majority of Saudi government borrowing, including large bonds and syndicated loan facilities, in the previous few years have been denominated in US dollars. As exclusively documented by oil price over the past few months, Saudi Arabia has undoubtedly made a further discernible move towards China. The most recent occurred when the China Petroleum and Chemical Corporation and the Saudi Arabian Oil Company, Aramco, formerly the Arabian American Oil Company, signed a multifaceted Memorandum of Understanding (MOU) in August. Sinopec's president, Yu Baosai, put it this way: "A new chapter in our collaboration in the kingdom has been opened. The two businesses will work together to revitalize the Belt and Road Initiative and Saudi Arabia's Vision 2030. The MOU's scale and breadth are massive, encompassing extensive and profound collaboration in engineering, procurement, construction, oil field services, upstream and downstream technologies, carbon capture, and hydrogen production. It also covers the potential for creating a massive industrial hub in the King Salman Energy Park, which will require considerable Chinese employees ongoing on-the-ground presence in Saudi Arabia, a tiny army of security people to guarantee the safety of China's investments, in addition to those specifically dedicated to the oil, gas, petrochemicals, and other hydrocarbon sectors." What is the petrodollar? Oil is universally paid for with the US dollar, resulting from an agreement between the US and Saudi Arabia in 1945. This agreement led to other oil exporting accepting the dollar as payment for oil, and the relationship between the dollar and oil began. Some countries exported so much oil and accumulated large amounts of US dollars that they could not spend them at all. If the country accepting US dollars as payment cannot pay them all, they are effectively removed from circulation. Petrodollars are the dollars these countries could not spend. Best strategies to save investments during this unpleasant situation. The world's largest country by land area, Russia supplies both oil and natural gas to many countries, particularly China and Europe. This arrangement caused significant complications, with Russia invading Ukraine in 2022, triggering many countries in the European Union and elsewhere to embargo Russian goods. According to aid data, China uses semi-concessional and non-concessional debt instead of aid. The Ukraine crisis and the tensions over Taiwan have increased the urgency of China's and Russia's attempts to destroy the dominance of the US dollar in international transactions. Vladimir Putin, the president of Russia, announced in June plans to establish a new worldwide currency based on a combination of the money of the BRICS nations of Brazil, Russia, India, China, and South Africa. Moscow and Beijing could escape financial sanctions by developing an alternative to the dollar-based global payment system. This economic tool's capabilities and limitations have been clearly illustrated in the reaction to Russia's invasion of Ukraine. The proposal, which Putin said was under study, appears to ask for a BRICS version of the special drawing rights of the International Monetary Fund, a reserve asset that IMF members can access in times of financial stress. 5 different currencies: the US dollar, the euro, the Chinese yuan, the British pound, and the Japanese yen are used to determine the value of SDRs. International sanctions imposed after the attack in Ukraine have resulted in the exclusion of many of Russia's banks from the SWIFT global payments messaging system and the loss of access to its central bank's abroad assets. A reserve currency based on the BRICS would give Russia a new weapon to increase trade in currencies other than the US dollar. China established the Cross-Border Interbank Payment System, or CIPS, to compete with SWIFT in 2015. As of June of this year, there were 1,341 participating banks, including the 2 Japanese banks, Deutsche Bank and JP Morgan Chase. SWIFT reports that in June, the Chinese yuan's percentage of global settlements increased by 0.4 points to 2.17% from 2 years prior. The fate of Russia's SDRs, valued at about $24 billion, is also a topic of discussion. In reaction to the pandemic, the IMF disbursed SDRs to its members for a record $650 billion. As a result, Russia's SDRs increased as well. But one of the central banks of the 5 currencies must conquer before Moscow can use the SDRs. While that road is closed with the United States, United Kingdom, European Union, and Japan, China may accept to swap them for yuan. According to analysts, China is unlikely to take a chance on adverse world reactions to support Russia. However, Robert Kahn of the Eurasia Group asserts that the world must pay attention to the development of China's and Russia's financial ties. Masaya Sakuragawa, an economics professor at Japan's Keio University, says the currency order tends to alter after a significant war. Sakuragawa argued that China might improve the yuan's standing by assisting Russia when the war is finished, just as the US provided relief to war-torn Europe through the Marshall Plan after World War II, which helped solidify the dollar's position as the world's reserve currency. New currencies, new challenges. Despite this, the alliance remains unequal, with Russia taking the initiative and looking for alternatives to the dollar. 60% of the Chinese exports to Russia were still denominated in dollars in 2020, compared to only 23% of Russian exports to China. Additionally, although Russia declared plans to partner with China to create a new global payment system in 2019 that would compete with the US-dominated SWIFT, Beijing has not yet made a firm commitment. The Bank of China is now the only Chinese member of the Russian system, SBFS, as it hasn't encouraged Chinese banks to sign up for it. Even if Russia and China dramatically reduce their reliance on the dollar, switching to new currencies would create difficulties. As Putin has also acknowledged, de-dollarization attempts will now have to contend with 2 more problems. The euro replaced the dollar as the primary currency in bilateral commerce, as shown in the graph above. Russia's susceptibility to US sanctions is reduced by adopting the euro, but the Russian economy is not protected from European Union penalties. The European Union now imposes 150 sanctions on organizations and people in Russia, and it has stated that it will further impose sanctions if Russia continues to aggress against Ukraine. The economy won't become instantly sanction-proof through de-dollarization. Second, as Iran discovered a few years ago, trading euros for rubles without using the dollar is likely to be challenging, given the dollar's prolonged dominance in the world's currency markets. This indirect participation of the dollar weakens the impact of de-dollarization unless the countries can increase currency swap arrangements between themselves and with other countries or develop substitutes like a central bank digital currency, CBDC, that avoids the dollar. However, it will take some time before a CBDC challenges the dollar's dominance in foreign transfers. Beijing and Moscow will also have difficulty persuading other nations to switch from the dollar to the more unstable ruble or RMB. This fact is reflected in the percentages of Russian and Chinese currencies used in the international transactions. Chinese RMB barely made up 2.7% of all foreign payments as of December 2021, trailing the US currency, 40.5% in euro, 36.7% in the British pound, 5.89%. Only 0.21% of the total was made up of the Russian rubles. The future course of action. It is now crucial more than ever that the United States and the European Union coordinate their sanction strategy towards Russia, as the 2 nations intend to enhance their bilateral trade shortly. By maintaining transatlantic cooperation, the US toolbox of financial instruments will retain its potency while limiting the advantages of moving further away from the dollar and towards the euro. Even if Russia trades with China and switches its dollar holdings to other currencies, it will be challenging to make its economy immune to sanctions, which is its primary goal. Although Russia and China have been able to work together to de-dollarize trade, their divergent goals are likely to impede further de-dollarization. China is hesitant on both counts as Russia actively introduces new steps to de-dollarize businesses and transactions. It is unclear how far China will be prepared to follow Russia's de-dollarization program, given that the dollar still dominates 3/5 of Chinese exports to Russia, and Chinese banks are still dragging their feet in joining SBFS.